Bitcoin has fallen in price a little bit. And so today we're going to be talking about a macro outlook, discussing macro trends that you need to be aware of, and understanding how the next few weeks of price action will determine potentially the next few months of price action. As we look for a local bottom on this bearish move here on Bitcoin, explain a significant concept that potentially a lot of you will not be aware of. We're going to talk about some significant altcoin news. So if you guys are excited for this, do me a favor and destroy that like button, because today we're going to be talking about critical info to help you understand the ebb and flow of these bullish and bearish movements. Also, don't forget that each and every comment on this video is entered to win a free Ledger Nano S. So if you guys want to win a free Ledger, all you have to do is comment below. So today we have to talk about a dreaded concept here in Bitcoin land called the CME Gap. The CME Gap refers to a gap in trading that occurs on the CME Futures Exchange. You see, here in the good old US of A, we have a few major highly regulated exchanges that trade Bitcoin futures, such as the CME, the Chicago Mercantile Exchange. The CME is a very old and established and traditional American trading exchange that does not operate on the weekends. And for that reason, we have what's called the CME Gap. The CME Gap refers to a gap in price action that occurs when Bitcoin moves while the CME trading is not in session. Therefore, on the CME chart, there is actually a gap between the close on Friday night and the opening on Monday morning. Now, in the history, which is not that long, of course, of the few years that the CME has been trading Bitcoin futures, there has never been a gap that has not been filled. Translation, the gap gets filled. Always. And this recent euphoric Bitcoin uptrend, spurred on by one of the most euphoric and bubble-like growths in any market in history across the stock market, commodities, housing, etc., has almost led to the belief that Bitcoin was just too strong in its uptrend to come down and fill the gap. Yet reality is set in, and it seems as though we're heading back to repeat history and once again fill that Bitcoin gap. So what does that really mean? So here we are on TradingView, which if you guys are not familiar, this is the best program to use for charting. This is what all the professional traders use. But as you can see here, we're on the Bitcoin CME futures, as you can see in the top left here. What you'll notice is there's a bunch of gaps here between where one price action closes and the next one opens. And like I said, these gaps come because there's gaps in trading time. But what you'll notice is that every time in history, this gap has been filled, meaning that wherever the gap is, the price action might go up away from it, but it always comes back and fills this gap, and it ends up coming back to the same levels. We see it time and time again, where the price action looks like it's getting away, but then comes down to fill. What we need to understand is that there is a gap here that has not been filled. And that's, of course, what a lot of top traders have been talking about since Bitcoin blasted off, is that there is this gap here at the $9,600 level, which a lot of TA experts are pointing to as a place where Bitcoin could see a big bounce. And so while the data suggests that the CME gap will always be filled because it's happened every time before, the reality is there's not exactly a logical explanation for this, except for the fact that essentially some of the biggest money bags in the world trade on CME and that they want their gap filled. So sometimes there's more or less a belief in the trading community here in crypto land that no matter which way the gravity swings, it will always eventually come back to fill the gap. So while we saw a lot of euphoria to the upside here, the reality is that we still have this tremendous gap to fill. And for that reason, what you'll see in a few minutes is that we're seeing some traders suggest that that's a target for a big Bitcoin bounce. We're going to be talking about what this means for the entire crypto movement right now, the entire DeFi altcoin season, in just a few minutes. If you guys have been following the channel, you know I am laser focused on what's happening around stimulus, money printing, and the external factors around this bull run, because I believe it is no coincidence that the altcoin season and Bitcoin's recovery moved almost exactly in tandem with the NASDAQ and the S&P 500 and pretty much gold over the last few weeks and months. There has been far too much correlation to ignore. However, what we're seeing here is an incredibly bullish underlying fundamental for Bitcoin. Remember in the video from 2 days ago when I explained the difference between a financial crisis and a dollar crisis, crisis. A financial crisis is where the stock markets and the general financial world lose their asset values, essentially equities and other types of financial instruments, even housing and stuff like that. However, a dollar crisis is where the dollar starts to lose its value. And what we see here is Jerome Powell, the head of the Federal Reserve, essentially set to deliver a profoundly consequential speech changing how the Fed views inflation. Fed Chairman Jerome Powell will speak Thursday during a virtual session of the Fed's annual Jackson Hole, Wyoming conference. He is expected to outline what could be the central bank's most active efforts to spur inflation back to, quote, healthy levels. Average inflation targeting means the Fed will allow inflation to run higher for a normal period of time. The effort will be the reverse of the former Fed Chairman Paul Volcker's rate hikes instituted to quash inflation back in the 1980s, which we talked about 2 videos ago. I highly encourage you guys to check out the video from 2 days ago where we talked about the Warren Buffett indicator predicting the stock market crash. Again, these are all concepts that are intermingled and tied. You must understand the importance of inflation and how it's going to impact Bitcoin, because essentially the dollar weakening is one of the clearest strength indicators for Bitcoin, especially measured in US dollar. So the reality is here that a move towards higher inflation rates would essentially mean more money printing, most likely in the form of stimulus or different ways to stimulate the economy, essentially lowering interest rates, making money cheaper and easier to get your hands on. And what we'll see here is essentially a weakening of the dollar. And that's of course because the Fed views the dollar as more deflationary than inflationary at the current moments. That's a concept we're not going to dive into, but just know the weakening of the dollar is incredibly bullish for Bitcoin. And as Bitcoin gains more market share, gains a bigger market cap, that adds more fuel to the fire for DeFi and the entire altcoin season that we're seeing. So it's very good for altcoins when Bitcoin explodes in value, even if temporarily they drain because people jump in to chase the Bitcoin pump. Now, with that said, we're getting mixed news here about stimulus. So really what we'll see and what we'll be waiting to see here is in the second week of September, if we see a tremendous amount of political will to get this stimulus bill passed, I think it's going to bode extremely well for the markets. And remember, regardless of the current situation of the lack of second stimulus bill, the political will and the reasons for passing one remain as strong as ever. In the most recent statistics released for the week ending August 15th, the number of new claims for unemployment unexpectedly spiked to 1.1 million, up from 963,000 the previous week. Clearly, the unemployment situation remains in crisis. There's also a housing crisis where the reality is many households have been in forbearance since the crisis began in early March. Forbearance doesn't fix anything, it just delays things so that this housing crisis will be set in motion in the future. So we have a multifaceted crisis on our hands, and the political will to pass a bill needs to be stronger than ever. So I believe that there will be a tremendous amount of broad-based support for a political bill of stimulus. We'll just have to see how quickly the two parties can agree on it during this election year. We'd imagine that the Republican side would want some bill passed so that the economy doesn't tank just before the election, and that would be very bad for essentially the Republican hopes of re-election for Donald Trump. I believe the economy will be a critical piece of information here, and whether it pumps really hard or dumps really hard, which seems to be kind of the only two options here, is going to be a huge decider. So we will see. So again, the macro outlook here has many question marks around it. Of course, the macroeconomic outlook in our whole world has a lot of question marks around it. And I try to underline that fact whenever I'm doing macro videos. Remember how deeply I talked about cycles in my video about understanding how to spot altcoins. It does not matter how good your research, how good the tech is, how good the team is, how strong the offering is. We've seen great projects get pummeled for years on end when there's not a bull cycle. So this Bitcoin pullback could be it coiling up to fill the gap and provide strength for an absolutely face-melting pump. However, there's also a chance that we're not able to see a stimulus bill passed, and that incredible important support for this bull run gets removed. These are all possibilities we need to be aware of. I personally believe it's extremely likely that they'll pass a second stimulus bill, at least a partial bill, to stop the bleeding and get more money into the economy. We've seen the political will to add more money to the economy to increase inflation, and of course, President Donald Trump seems to be willing to sign any check just to get money out to the people. The real holdup here seems to be in the Senate. Without getting too deep into politics, I believe there's enough will to keep the party going, and I think that we're going to see a big effort to print our way out of a crisis, as opposed to go through what Paul Volcker did in the 1980s, which is essentially drive the crisis to a much worse place to essentially strengthen the dollar. I don't see us doing that. The dollar's extremely strong, I think, in relative terms still, and so I believe there's a tremendous amount of will to weaken the dollar and essentially push them back to a V-shaped recovery. Let me know what you guys think about the macroeconomic outlook and whether or not they're going to keep printing those greenbacks in the comment section below. We see here traders that are eyeing the $9,600 level to buy the dip, and doesn't that seem just perfect as we're looking at 96.55 here as the level that it would need to come down to fill the CME gap. So when you see and you have multiple indicators, multiple layers of confirmation, that's when you start forming a powerful thesis about where the market's going. If you just have one data point, you will most likely always be wrong. But by relying on a wider group of data points, you can form a much more data-driven analysis that will allow you not to be right every time, but based on the law of large numbers, statistically, you'll get it right more times than you're wrong. And that's what we're looking for, is statistical advantages and essentially managing risk from a macro perspective. We're also going to define one more term before moving on to the next piece of data, which is, of course, understanding velocity of money. Now, the velocity of money is a measurement of the rate at which money is exchanged in an economy. The number is the number of times the money moves from one entity to another. It also refers to how much a unit of currency is used during a given period of time. So what the velocity of money is talking about is as they put new money into the system, for every new $1, how many times does that $1 move from person to person to person before it gets put into essentially a long-term holding period or a savings account? And what we've seen is over time, essentially the velocity of money completely collapsing. If you can see this chart over here, you'll see the velocity of money during the 90s was insanely high, almost about 2.2 at its peak mean. And so what we see here is that the velocity of money over the last 30 years or so, or the last 22 years or so since its high in the late 90s, has absolutely plummeted to the point where it's almost reaching 1, meaning for every new dollar that goes into the economy, it just moves once, meaning that they have to print more and more and more to get the economy actually stimulated and moving again. What this means is that you need to print more to have the same effect on the economy. You need to inject more money in to have the same multiplier effect on the economy. And that means that the move towards higher inflation is actually going to need to be much higher than previously in history to have the same effect, because that money is not moving and stimulating the economy. People are hoarding their dollars. They're just sitting on them to avoid risk. And this is what leads to an inflationary spiral, because essentially the velocity of money will not allow for the normal printing to have its effect, and they're going to need to fire up those printing presses at an exponentially higher rate. And that's how we get more of a move towards hyperinflation. And of course, the weakening of the dollar measured in US dollar terms will drive Bitcoin's value higher and higher. So this is a very important concept to understand when understanding that all of these concepts tie together to show that Bitcoin has a wide variety of positive macro attributes that would paint a bullish picture. Meanwhile, Bitcoin mining is on the rise with a 9% increase since the halving, which is of course a tremendously positive fundamental indicator. When the Bitcoin difficulty rises, it means there's more hash rate and more miners securing the network. More security is more good for Bitcoin is the bottom line here. So seeing an increase in the difficulty means that the mining industry is once again being seen more favorably, and the long-term outlook on Bitcoin becomes more favorable as the asset becomes more reliable and secure. Moving on to some altcoin news, we also have Aave protocol, or Lend, becoming the #1 in DeFi rankings. They rallied super hard above 40% after receiving a UK FCA approval. In the last 24 hours, Aave Lend rallies to a new all-time high after surging 30% from 59 to 77. The strong upside move comes as Bitcoin and most altcoins are in the red, having lost momentum as the US dollar bounced. Again, we see comparisons constantly between the US dollar strength and the crypto index strength, measured of course primarily by Bitcoin strength. We also have news for all you pumpkin spice latte lovers that Starbucks is going to let their customers trace their new coffee's provenance from bean to brew using blockchain. So again, this isn't going to pump your bags, but it shows this technology has wider applications than just Bitcoin. It has wider applications than just speculation if Starbucks sees value in it, right? This is important. Supply chain, logistics, and tracking, which we will be doing a segment on this coming week, all of the coins in that space that could actually stand to do well as technologies like this get adopted. We also have China declaring their launch of its digital yuan at the 2022 Winter Olympics. Now, this has been a long time coming, and China's move towards a digital yuan, I believe, can potentially be a tremendous threat to the dollar if we don't have a similar movement in the near future. The move to a fully digital national sovereign currency could mean the spreading of that currency in places that do not have robust banking ecosystems like rural Asia or, of course, Africa. The ability to spread a digital version of Chinese currency, which is, of course, much more reliable than most fiat currencies, is a big threat to the hegemony of the US dollar. And by the way, we've seen news articles for 5 years straight saying that they're coming out with a digital yuan and it's right around the corner. So to me, seeing another article saying that much is not necessarily dispositive here of proof. But here they're saying they're going to launch it at the Olympics, which makes a lot of sense, right? They're going to have a bunch of foreign people, and making it very easy to interact with all kinds of tourist destinations, shops, and restaurants in the country could be a great way to jumpstart this digital currency. So I'm very interested to see where this goes, and this could, of course, start the stablecoin wars between countries where really we would end up falling behind the US dollar if we don't develop and launch our own digital version of it. Of course, looking at the charts, we have an incredibly bloody day here, and I've seen some comments. Obviously, I'm not taking these too seriously because they clearly are not following the channel and moving in real time. Again, like I said, guys, everything changes from minute to minute, much less day to day or week to week. So I wanted to review some of the coins we talked about, and of course, we talked about Trust Swap at 20 cents. Somebody was commenting saying, yeah, well, you told people about Trust Swap, so now they're screwed. I don't think you're screwed if you got in when I told you about Trust Swap at 20 cents, or when it was up at $1.50 and I told you wait for the dip because this thing has gone up way too fast. I don't think you'd be screwed either. I think you'd be in really good shape if you waited for this dip. I think it went down to 80 cents, right? So if you waited and got it at 80 cents, you'd actually be sitting on gains right now. Remember, there wasn't a lot of support on the Trust Swap chart between like 20 cents and $1. So having it come back down and build these bases of support is good. But again, like I'm saying, with something that's still up this much, you just want to DCA in. You want to take little bites over time because they typically correct and build strength in a lower area before rocketing up to a new leg. In the Trust Swap video, that's the strategy I outlined, and if you're following it, you'd be in really good shape. Remember, we covered DIA at $1, right? We covered DIA at a $5 million market cap, and so right now it's sitting at an $83 million market cap. That's just crazy. Obviously, they had a little bit of inflation of the supply, but seeing here sit at just under $3, you're still doing really good based upon my DIA video. As well, Parsec, which we covered yesterday, almost didn't move at all. It didn't lose almost any of its gains from the last day, which I found to be quite amazing, that it really just didn't falter here. Of course, it might pull back. I don't have a crystal ball, but again, these gains are being held by the coins that I've been talking about. And same with ChainX. Look, ChainX is at like all-time highs right now. Look at this ChainX chart. It's a thing of beauty right here. And so, you know, I've been seeing people hate on my calls, but the calls that I've been pushing really hard, the real gems, they're doing amazingly, right? They're doing amazingly. Even in this big pullback, you're seeing ChainX actually grew today. And so, you know, when you find great tech and you do your research, that's the best way to move through this altcoin forest. When you're looking at just pump coins, they tend to absolutely dump on days where there's fear, uncertainty, and doubt. But when you're looking at really good tech that has a through line, that has a future, even on those down days, people tend to put their coins into more solid projects. And so I think that's what you're seeing here on PCX. So that's it right now. All eyes are on the CME Gap, hoping that essentially that's a base of support where Bitcoin can blast off and truly have its parabolic run from those levels. Of course, all eyes are also on the stimulus bills, those macro external factors that could drive more value into the ecosystem. And of course, those are looking tremendously bullish, and I do believe that we will see another stimulus bill, but the timing of that is becoming a little harder to predict. Regardless, typically before elections, we see the economy pump, and based upon the law of large numbers, I'd like to believe that this time is no different. So my macro outlook is still looking at Bitcoin to come down, maybe fill that bewitched gap that it has on the CME charts, and hopefully go for another parabolic leg up from there. And of course, while Bitcoin stagnates or goes sideways, what we've seen is a tremendous amount of bullishness in the alts. And so as Bitcoin starts to find its footing, maybe even becomes boring again, I believe that those alts will start to find even higher legs up. We've seen it with Aave, with Lend. We've seen the good coins continue to rise towards the top. And of course, I wanted to review the calls and how I made those calls. And most importantly, understanding that this DeFi fueled altcoin season is based upon a big narrative. And those narratives fit into cycles. And that, of course, if we continue on that cycle, that narrative will continue. So I'm not taking everything out of the market right now. I'm not moved into stable coins just yet. I want to see how Bitcoin reacts. I want to see how Bitcoin reacts during this downward price trend. And of course, looking for it to have a nice bounce or a nice base of support there off that CME Gap level. I bet a lot of future traders will be looking at that level as a serious inflection point on the market. Again, I'm not a TA professional, but that's how I'm looking at it from just a macro 30,000 foot perspective. In the meantime, I'm still extremely excited about the altcoins that we've been covering because the macro cycle has not changed. And until that happens, I am not bearish. So I hope this has helped you guys contextualize these Bitcoin movements, understand the various factors acting on Bitcoin's price action, from inflation to stimulus to the CME Gap. These are all critical pieces of information, and filling that CME Gap is by no means a bearish move. If we do that and we're able to move then higher again, that would be incredibly bullish for the long-term price action, I believe. So I hope this video has helped you guys contextualize this recent Bitcoin dump. And of course, I wanted to go over a few coins. I guess I get a little bit annoyed when people take my words out of context. They haven't been following the channel and they haven't actually comprehended my real strategy that I've communicated in these videos. So if you guys enjoyed this knowledge I've provided, if you got value out of this video, do me a favor and smash that like button. And of course, if you're not subscribed, I'm making daily cryptocurrency videos helping you stay ahead of the market and exposing some of the most undervalued and best technologies in the space that you can get into early, that you don't have to be part of the late party. You don't have to be some of the last ones to show up and see the value in these coins. So if you're interested in that, I highly encourage you guys to subscribe and make sure you have that bell notification on. The bell is critical if you actually want to be made aware when I put these videos out. And of course, the people who have that bell on, I believe they've been handsomely rewarded by this market of late. Of course, if you want to connect with me personally, I highly encourage you to follow my Twitter at LEOTrades and join my Telegram group t.me/LEOTradesCrypto. The links for both of those are in the description. As usual, my name's LEO Trades. I thank you so much for watching, and I'll see you very soon on the next episode.